Welcome back. You're still watching Business Morning on Channels Television. It's the Tuesday edition of the program and the first edition for the month of April. We're turning our focus now to the oil and gas sector, with particular attention going to be placed on local content. Now, it's been 4 years since that law was enacted, and we're going to be talking about that on the program today. I have here with me in the studio two gentlemen, both oil and gas sector analysts, Ademola Adedoyin and Zigzulu Okafo. Thank you so much, gentlemen. Good morning and welcome to Business Morning. Well, like I said, it's been 4 years now since this law was enacted. And so many things have happened. But let's just start with your, honest assessment, objective assessment, I might add, of what has happened in the last 4 years since this law was enacted. Mr. Okafo, let me start with you. Okay,
I'll start. I think the best way to start is, first and foremost, give a brief historical perspective to this.
Okay.
And that's to say that on the 22nd of April 2010, President Goodluck Jonathan signed the local content bill into law. Now, we need to understand what was happening before then. And that's going back to about 1956, when oil was first discovered at Iloberi in Bayelsa State, South Nigeria. Between that time and 2006, when the bill, was started getting attention, that's a period of about 50 years. The business of oil, 95% of the business was done offshore, I mean abroad. So, according to the Nigeria Content Development and Monitoring Board, NCDMB, you find out that within this period, Nigeria lost to capital flight about $380 billion. See, what it means is that Nigeria lost to procurement about $214 billion within this period. Lost about $78 billion to technical services, about $9 billion to research and development. And then during this period as well, you exported about 2 million jobs when there were graduates and professionals roaming the streets of our country. So Nigerian content was a courageous attempt by the federal government to tackle and indeed address this anomaly.
Okay, so now let's bring it closer to the period when this bill actually now became a law.
Yes.
And when, how much of all the numbers you've called, like $380 billion capital flight that you said we saw, and then the 2 million jobs that were lost, how much of this has been addressed? Adedoyin, let me come to you on that one.
Yeah, thanks so much. It's a very interesting development, really, because we need to also, before answering your question, we really need to take it back to 2006, when the first attempt to, okay, let us have a law in place that will ensure that the Nigeria content is legislated, so that people will know that Nigerians must be able to do something in that sector. Now, from that 2006 to 2010, when the bill was signed into law, you had a situation where even those 4 years, a lot of activities started happening because there was a deliberate attempt on the part of the government to encourage Nigerian participation in the oil industry. Between 2010 and now, by April 22nd, it's going to be 4 years that the bill became a law. Now, between that time, we are talking of a situation where about $5 billion investment has been recorded as a result of activities of procurement, Nigerians now participating in rigs, participating in pipe mills. The yards are now getting expanded, and so on and so forth. So as a result of those activities, you have a situation where the economy is deepened by those activities. And again, you ask a question, you said specifics, about 30,000 jobs have been created.
38,000
yes,
jobs. That's for a sector that a lot of people say it's very close-knit. In fact, it's very difficult to penetrate it. And they don't employ people. So 38,000 for such a sector, it's okay. But then it could have been better.
Yeah, it could have been better. So if I can tackle this, it could have been better. As a matter of fact, during the last Nigeria Oil and Gas seminar and conference in Abuja, the Nigeria Content Development Monitoring Board ES Executive Secretary, Engineer Wakwa, did say that you look at the area of fabrication, about 60% has been recorded. You look at engineering, about 90%, that's participation, engineering participation, about 90% has been recorded. But you look at manufacturing, you are talking of 10%. Okay? So what that implies is that something is still basically wrong. That aspect of manufacturing needs to be encouraged. The government will need to do everything to ensure that a lot of items are manufactured here. A lot of items needed in the industry are manufactured here. It is then that we can start talking of total gains of this act.
So is that the reason why we've been getting complaints? Because there's still some, practitioners in the industry who are complaining.
Yes, but first you recognize in dollar terms, you find out that in these 4 years, jobs retained in country actually has come to about $237 billion, because it says that about $167 billion worth of procurement has been done in country, and about $20 billion on engineering jobs, about $7 billion on research and development. But for this law, all these jobs would have gone outside this country, but they are retained in country. So that means that a lot is being done. But it does not change the fact that, yes, there are still, there will always be complaints about, whether we've had enough. But that in itself is another matter.
Yeah, we should not also forget that it's a long-distance race. Yes, it's so. If within a period of 4 years, we are talking of a situation where today Nigerians are participating in procuring high-tech vessels, Nigerians are participating in hiring rigs, Nigerians are participating in pipe mills, and so on and so forth. Some of those yards that activities are now at hyper level today. 4 years ago, perhaps employed less than 20, 30 Nigerians. But today, they are employing hundreds of Nigerians. So a lot of activities are really going on.
But then you see, there's still some, there's this argument that even though the Act actually favors more indigenous participation as against foreign, the foreign participants are not particularly happy. And so we're beginning to see them trying to sabotage in little ways that they can the success of this act.
Harrieta, I don't know if I want to use the word sabotage, but what I do know is that in a situation like, you see, somebody said at a seminar that no foreign entity, either be it corporate or government or whatever, will come to your country and encourage you to enact laws that will work in your own favor, especially when the existing laws are working in their own favor. So I would not expect, for instance, the IOCs to start clapping as soon as the law, as soon as you start saying, hey, some of these things we have done over a period of 50 years, you will soon stop doing them. But even then, to be fair to them, they are beginning to see that, look, they have no option. All we need to do, all the Nigerian government needs to do, is to be consistent and to show that, hey, we are serious about this. And they will fall in line.
Now, another issue has been that the law actually tried to address this expatriate quota in the oil and gas industry. And to what extent has this been complied with?
There's no question that we've done very well in that area, because for the first time in our history, the Nigerian Content Development and Monitoring Board has a complete data of expatriate quota, in all these companies.
Well, sorry, just refresh us. What is the quota that it's supposed to be, Nigerians as against the expatriate?
Yeah. No, what it simply means that there are, first, any job in any of these companies that has Nigerian competence, by which I mean that Nigerians can do this job, you have to employ a Nigerian.
Let's do it on a percentage scale. Yes. On a percentage scale, what is the quota of indigenous workers as against expatriates?
Well, that may be difficult to work out now, but what has happened is this, and we really need to understand it in this context. Before now, okay, the IOCs and the other oil companies could probably bring in as many expatriates as they wanted and all of that. Okay, the law was there. I mean, there had been some attempt then to tame this and to encourage a lot of things, but the law now is so specific. What the law has done is this: the Nigeria Content Development and Monitoring Board now has a data bank, okay, which now says that, which now implies that if you go to that data bank, it will tell you the number of expatriates in Mobil, in Shell, in Chevron, and such expatriates, they are being, those companies are being compelled. You can only employ expatriates when you are able to prove that there are no Nigerians who can actually take up such jobs. And secondly, you really now need to follow it up with a succession plan. That, okay, so in the next 2 years, this expatriate will come in, but we are going to make sure that in the next 2 years, a Nigerian is trained who will be able to take over from him. The Nigeria Content Development and Monitoring Board is monitoring that. So at the end, at the expiration of that guy's tenure, they're able to say, okay, hey, you've got to go, in Nigeria must take over.
Okay, so Zik, could you just add a little more to what he said already?
No, I think he has made all the point. The point that for the first time, there is absolute control of expatriate quota. So just like he said, once a Nigerian can do that job, you have to employ a Nigerian. Except the Nigerian can't do it. In that case, you have to employ an expatriate staff, but with a succession plan that over this period, it's expected that a Nigerian will be able to do this job and will have to take over.
So who is going to, within this 2-year time frame, there's supposed to be some form of training to ensure that Nigerian is supposed to take up that position at the end of the two-year term of the expatriate that is there.
That is where that company concern comes in. And that is where the Nigeria Content Development and Monitoring Board, as it were, the policeman of the industry, comes into the scene. So they are monitoring it, so that at the expiration of the 2 years, for instance, if Mobile employs somebody today and says we have found out that there are no competent Nigerians, so we bring in an expatriate, NCDMB is saying, okay, let the guy come in, but make sure you train in Nigeria in the next 2 years. So it's been monitored.
So it's the company.
So at the expiration of that 2 years, you cannot say you want to renew the contract of that expatriate, because you've agreed that
within this
2
period,
years, that
should be able to
Nigeria should take over.
Okay, so if with all this seeming plan, to ensure that Nigerian local content is achieved as much as possible, why are there still complaints?
Well, I do not think there's much complaint because the local content has been a lot of benefit to Nigerian companies. There's no question about it. So I do not think there are complaints because what they're not doing before, they are all doing today.
Mr. Okafor, I beg to differ, because if for instance, there weren't any complaints, then we would not be hearing that there are complaints, because some are still not comfortable with the way the quota arrangement is going.
Some still feel that some local indigenous companies are overlooked in favor of the IOCs because they believe that they have the necessary fund and the expertise to do this job. But I am saying that to a very large extent, that indigenous oil companies in Nigeria today, the service companies, are doing a whole lot of jobs that I think there are complaints, they will be very minimal. That's my candid opinion.
Well, let's take a quick break here, Mr. Okafor, catch our breath and come back and continue this conversation. You're still watching Business Morning on Channels Television, and today on the program we're looking at issues in the oil and gas sector with particular emphasis on Nigeria's local content. We'll be right back.